Big Oil wants you to believe they are entering a golden age again. High dividends, safe assets. Global demand is booming. They're smiling for investors, whispering, "Drill, baby, drill." But what if the real story is that they're fighting gravity? Because from my chair, watching the charts and the chatter, I see a quiet inversion happening. The oil industry is trying to pump optimism into a market that has already moved on. And that move, my friend, is toward clean energy at a speed that not even the suits in Houston or Riyadh can slow down. So today, we'll pull apart the illusion. I'll show you how the numbers, the markets, and even the developing world are quietly rewriting the energy script. Before we dive in, hit the subscribe button and share your thoughts below. I read every comment. Tell me, do you still believe investing in big oil has a future? The mirage of profit. Let's start with the illusion big oil sells best, profit. The narrative goes like this. Global demand is up. Emerging markets are hungry for cheap energy. Political tides are turning back toward fossil fuels. On the surface, that sounds solid. But beneath it, the foundation is cracking. In 2025, the Energy Select Sector SPDR Fund, ticker XLE, was flat. That made it the worst performing sector in the S&P 500. The explorers and drillers, XOP and OIH, are both down more than 7% this year. That's not what you'd expect in a supposed oil boom. Meanwhile, West Texas Intermediate crude sits around $56 a barrel. That's a 22% drop this year, dangerously close to the cost of production. Drilling rigs are being pulled and CapEx budgets slashed. And yet, you'll still hear executives calling this a temporary adjustment. Temporary? Maybe. But when an entire industry's margins depend on maintaining an illusion of growth, it starts to look less like strategy and more like denial. This is where political optimism meets financial entropy. Political dreams versus market reality. Remember the old "Drill, baby, drill" slogan? It's been revived like a classic rock anthem nobody asked for. The idea was simple. More drilling equals more jobs, more independence, more profit. But markets don't trade slogans. They trade expectations. While politicians posture, investors vote with capital. And they've been quietly walking out the side door. You can see it clearly in the divergence between fossil and renewable ETFs. Clean energy funds like the Invesco Roundhill Clean Energy ETF PBW are up 67% this year. That's 7 straight months of outperformance, the longest winning streak since 2021. Investors are not buying rhetoric anymore. They're buying a transition. It is as if capital has already seen the movie and knows how it ends. The Global South leapfrog. Now here's the twist big oil doesn't want you to notice. They're betting big on emerging markets, Africa, Southeast Asia, Latin America. They see these as the last frontiers for fossil fuel demand, but the people on the ground have a different plan. In many parts of the Global South, they are leapfrogging the fossil phase entirely. Just like they skipped landlines and went straight to mobile phones, they're skipping the old energy ladder. China is pouring renewable infrastructure into Africa faster than Western oil firms can drill. Wind farms in Kenya, solar fields in Nigeria, and green grids in Vietnam are not the future anymore. They're the present tense of energy economics. When the marginal cost of solar keeps falling and storage technology gets cheaper by the month, fossil expansion starts to look like a 20th century business model trapped in a 21st century spreadsheet. It reminds me of an old Zen riddle. When the tide goes out, where does the wave go? The answer is not that the wave disappeared. It simply changed form. So has the energy market. The investor's mind shift. Let's talk about where the money is actually going. In 2025, global clean energy investment will hit about $2.2 trillion, double what's being spent on fossil fuels. In the major markets, China, the US, Europe, India, clean energy spending now outpaces fossil fuel investment at roughly 2.6 to 1. The job market has already flipped too. There are more people working in clean energy, over 36 million, than in oil, gas, coal, and internal combustion manufacturing combined. And it's not just because of policy pressure. It's because capital follows efficiency. Every decade, we've seen what happens when technology meets scale. Solar costs dropped by over 80% since 2010. Wind costs by 70%. Storage is on the same curve. That's the compounding curve Big Oil forgot to model. They thought the energy transition would be linear. It's exponential, the illusion of control. In Zen, there's a teaching about the fisherman's net. You can tighten it all you want, but if the river is flowing strong, it will carry everything downstream anyway. Oil executives are tightening their nets. They're cutting costs, consolidating, lobbying harder, and trying to buy time. But time is flowing the other way. You can almost sense the desperation in quarterly reports. The language shifts from strategic growth to cash discipline, from expansion to efficiency. It's the sound of a giant learning humility. And that's not a bad thing. The truth is, even within Big Oil, there are smart, forward-looking engineers and analysts who see this clearly. Some of them are leading the pivot from inside, turning rigs into wind hubs or leveraging oil field data for geothermal projects. They are practicing what Zen calls no-gain mind, doing the work without clinging to the reward. The middle path of investment. Now let's bring this back to you, the investor. I often tell people, don't try to pick sides between fossil and clean energy. Instead, pick balance. In my own middle path portfolio approach, we don't chase ideological purity. We seek resilience. A wise portfolio doesn't bet on which energy wins. It bets on the inevitable direction of human behavior toward efficiency, adaptability, and value creation over time. That means blending stable developed markets with high-growth emerging ones, just as it means holding exposure to both legacy producers adapting to the shift and innovators defining the next era. The market itself is like a Zen master. It has no ego, only feedback. When it strikes the floor with its stick, you either wake up or you don't. The global reality check. Here's the macro truth. Even if every government stopped talking about climate today, the economic engine of transition would keep running. Why? Because energy independence is a competitive advantage. Because young nations want cleaner cities. Because investors see better returns where innovation thrives. That's why even oil-rich countries are hedging their own futures. Saudi Arabia is pouring billions into green hydrogen. The UAE is building the world's largest solar park. This is not about morality anymore. It's about math. And if you understand that, you'll see that the biggest secret Big Oil is hiding isn't a conspiracy. It's the fact that the market no longer believes its story. Closing reflection. The late Zen master Kodo Sawaki used to say, all of Buddhism is a footnote to sitting. He meant that no matter the noise, the truth shows up in stillness. In investing, that stillness is clarity. You don't need to panic or preach. You just need to see clearly where the flow is moving. Right now, it's moving toward clean energy, innovation, and global diversification. Not because it's fashionable, but because it's efficient. So next time you hear the drill baby, drill chant, remember, that's the sound of a generation trying to hold back the tide. And tides, as any Zen fisherman will tell you, always come in. If this conversation sparked a new perspective, drop your thoughts in the comments. Do you still hold oil stocks? Do you see renewables as overhyped or as inevitable? Like this video. Subscribe to Still Ambitions and keep walking the middle path where wisdom, wealth, and clarity meet.